Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, December 10th, 2012. All right, let's take a look at the S&Ps over the weekend. It's right now 7:30 p.m. Central Time on Sunday evening, Sunday the 9th of December. So far, the head and shoulders, this shoulder on the left, triple head on the top, which I've called the Mandragi crown, came down here, reestablished the shoulder, came down, came up to the shoulder, and we've hit it twice. Once unsuccessfully on December 3rd, and another time on Friday the 7th. So the 21, this area over here, 21, the 1421 is holding, although it is giving me a few fits and starts. You can see it's already been up a couple hundred, 300 on the overnight session, and it's still up. It's up 125. It seems that the 1421, that is my line in the sand. It did hit it twice. We'll have to wait and see what happens. Let's look at smaller time frame here. If we go and look at the 21 minute period, 21 minute chart. These are not overnight. These are not overnight trades. They're only the tick charts are overnight. But you can see that it's starting to trend up a little bit on the short-term graph. Now on long-term graph, back to the daily. T1, 2, 3, and 4 are still below zero. T5 is just hovering. The small wave is hovering around zero. So this may actually have a little upward bias. If we look at to see what the 1597 is doing, it's had an upward bias. So this was the move on Friday. Let's put a line in here. Okay, so with the monster employment, when the monster employment numbers came out, it was down like a couple hundred, and then it jackknifed up, like way up to here. So up to my line in the sand of 1421 and a little bit higher, and then it managed to work its way down all day long. Now, if you were watching the Triton waves and playing the Triton waves, then you would have got, unless you're the kind of person that likes to short gaps, you would wait conservatively to get in at 847 at around 1416, and then you would jump out and go long right at the 377 at 1411, just ride it through the rest of the day. So very little volume. It's just kind of like waiting to see what happens. Overnight, I'm looking at the euro dollar. The daily seems to be wanting to turn over just a little bit. Let's see what the dollar looks like. Dollar index is actually snapping back a little bit. If the dollar goes up, the Dow's going to go down. So we'll just have to wait and see what happens. Something that I have not looked at for a long time, because it was a counter trend trade for a long time. So it just is the. Now, when I was following this, it was back here. So risk. I'm sorry, that's Euro Japanese. I want Euro. I want Aussie yen. Not much better. Okay, so when I was following this as a turn in the market, the Aussie yen was down around 79.71. It looked like it wanted to go lower and head for the lows of 74.60. What happened was that the stock market actually started moving down, and risk was coming off the table. So that's kind of like there's something going on with the yen that I'm not really sure I can explain. I think it has to do with the Aussie dollar increasing their increasing their interest rates. So it may have been, I would think it would be less appealing, but apparently this is a divergence because the stock market actually, S&P actually started going down right around this time, and they started having risk on for the Aussie yen. So I'm not sure what's going on there, but it's certainly not in synchronization with the market. More so, what's going on with the market is the euro dollar. It came up here a little bit, and now it's going sideways to down, and the action overnight on Sunday is it started with a gap down and it's kind of filling the gap. So we'll have to wait and see what happens there. Let's move this out of the way. I still like I still like 1421 as my line in the sand, and we'll see if this starts to cross above zero, then I'm out of it. I'm not currently short the SPX or the SPY or the ES, but I am short couple stocks that I'll show you in a minute. Okay, if we look at Apple, one of my favorite stocks to play, I like Apple and downside. You can see the 8 and the 21 cross back over again, and they're both on the daily, and the 8 is now below the 233, and the 21 is approaching the 233, and this large candle down, I think it was like 37 points. This was 14 points today. On Friday, and it looks like if we just move this up a little bit here, it looks like it just wants to take out the 377. If it does, then the first target is this inside track here of right around 499, 500, which would put us right below the 507 move that happened on November 16th. So looking at the 21 on the right-hand chart, T4, the longer waves, T5, T4, T3 until still below zero. So whatever happens on T1, if you have enough time on your options, then just stay with it. If you're in December, then you have to watch it a little more closely. If you're in January, you're fine, because this is liable to go sideways to up a little bit with this above zero, but then it'll continue down. So let's look at the ABC waves if you're following those. Same thing with the ABC waves. This went firmly down below zero, way back here, and if you took a little heat on it back on November 27th, if you took a little heat on it and stayed with it, then you got this whole tremendous run. And still, the B wave is below zero, the C wave is below zero, and this is the key indicator right here. Right here, the C below zero right here. If you're day trading it, I like the 1597 on this, and the 1597, let me see here. Maybe a little bit smaller chart here. Okay, so on the 987, you're long at 528, took you all the way up to 377 at 547, and a little bit beyond that, if that was your target, conservative target, and then you waited for another conservative line to take you down below, which was T4 on the T4 got you in at 541 and it hit 530. Same thing on the ABC waves. If you don't have them, you can follow during the daytime, make your own trades. You don't have to wait I only do these like Sunday for Monday, Tuesday for Wednesday, and Thursday for Friday. So in the meantime, you can be trading your own. There'll be information at the end of the video on how to obtain those. All right, one more, Goldman Sachs, which is another one that I like short. Let me get rid of some of these lines here so you can see it clearly. Goldman Sachs is basically going sideways to down. You can see by the action of the waves, it's going sideways, sideways. T3, T4, and T5. T5 just went below zero, which is a real kind of nasty to the downside indicator. This is not a good trade here. That's not the correct number. It finished at 116.57. This aftermarket stuff, sometimes eSignal just puts out these numbers. The actual, hang on a second. The aftermarket was actually down about 30 cents. So these extra hash marks here don't, and candles don't really count on this. On Goldman Sachs, I like to use the 610, seems to work really well. And you can see, so basically when it goes above 0 in T1, you do not take this. That's where you exit, but you don't take the trade to the upside because T5 is below 0. And T1 is below 0, and T2 is just below 0. So look at the action on the left-hand side. We bounced off of the 377 on the daily 3 days in a row as the 8 has crossed the 21 to the downside, and it's about to cross the 55 exponential moving average. That is not a good sign. I'm looking for at least a test of 113.80, and if we look down a little bit, oops, hang on a second here. Ba-ding, ba-ding. If you look below, I like this area. I like this area right here, right around the 233 at 108, or even 105.57. This area right in here. All right, Google, we'll look at Google and Amazon and call it a wrap. Google did the spectacular turnaround on Friday. It actually looked like it wanted, this is kind of what it looked like. It looked like it wanted to turn up a little bit, and then it did a reversal. Not only did it do a reversal, but for the first time, T4 on the 610 tick chart went below 0 on Friday's trade. That is a negative sign. That is a put opportunity. The T5 is just a couple clicks away from going below 0, and on the daily, T1, 2, and 3, the shorter term waves are below, and the longer term waves are kind of drifting down. So let's look at the 21 on this. 21. So the whole time the T1 was below 0. Let's see how far back we have to go on this on the 21. You have all these plays on the waves. You can just watch if you just basically take let's take T1. Okay, so if this is down below 0, you don't want to take it on the upside unless you're playing a counter trend trade and you're just watching it all the time. So you get in on the downside right here, and this is actually almost a 30-point move. Wait a minute. 688 down to 653. Stay out of it because T1 on the left side is still short. But you can take this move here a few days later. 662 down to 642. Stay out of it. You can take it here, although this basically was a flat trade. That didn't work for you. I still wouldn't take this here unless you were a short-term trader and playing the 610 tick chart on it. But you had a great opportunity on the downside. If you're just following the rules of using T1 on the daily as an anchor, then you don't go counter trend trade. So you could do this at 696, and it's still, let me see, when this shorted out here, it was 688. So let's look at the 610 actually on all right, so if you were playing the 610, you could take actually more moves than that. You could take all these moves above and below 0, and they would have worked for you. The same thing on the B wave, on the 610 tick chart. Here's B wave right here, up, down, down on the pink, and you are still down because we haven't cleared 0 yet to the upside. So I want to wait and see what happens with this, but it looks like Google is going to the downside. Let's take one more look at let's take a look at Amazon. last stock to look at. It would help if I spelled it right. AMZN. Okay, Amazon in the tick chart. Long at November 11th on the C wave, and then it went short on December 6th. So on the daily on the left-hand chart, you can see it was short here, but the daily sometimes is a dragging indicator. So I'm just looking at the 21 on the on T1, 2, 3, and 4. They're all 1, 2, and 3 are completely below 0. 4 is halfway below 0. So this looks like a good counter trend trade down to 244. If we extend this up, it's probably going to be 240, probably about 245. Good counter trend trade on a slip back in the market. And if it continues up, which is about where the 21 period moving average is on the daily. So if it's going to continue up, it at least has to come down to here. So this is a good counter trend trade because T5 is still up on the 21, and it's gone back up on the daily also. T1, T2, and I'm sorry, T1, T3, T4, and T5. So it looks like it still may have a lot of juice to the upside, but this is actually an excellent counter trend trade because the T4 right here went above 0 at 225 on November 19th, and now is below 0 for the first time since then in about 3 weeks at a much higher price. And the trend line that was established for this moving up is clearly broken. So I like this as a short-term move to the downside. Well, good luck trading. That's all I have for tonight, and enjoy the rest of the evening, and it should be actually a pretty exciting week. We have 2 weeks to go for December expiration, and the so-called the expiration for December options is 12/21, which I'm sure if you've been listening to the news or heard this story for years and years, is the Mayan end of the world. So we'll just see what it has to do with stocks and the fiscal cliff. Maybe it should be a real show to watch. Have a good evening. I've added my my LinkedIn if you want to connect on LinkedIn with me or add me to your Twitter list. And these are the ABC waves are available at TradeStation for eSignal, Sierra Charts, Ninja Trader, and TradeStation. I think probably Ninja Trader should be called Ninja Turtle. All right, I will see you at the next update. Have a great evening.